Welcome to our weekly report where we've created a real-time track record of our market forecasts going back several years. My name is Jay Norris and I teach trading at Trading University. As always, we need to remind you that trading involves risk of loss and is not suitable for all investors. Here's the Aussie USD. You can see some lines below there that would indicate support. We would anticipate one more leg down into that support. And at that point, we're really not as interested in the short side as we had been. 80 even was a long-term target of ours. We think there's going to be pretty good support down there at that level. Looks like the market turned higher here. You're having a little bit of a correction. Toughest thing in trading is to anticipate corrections and how far they go, but we do think that this is a correction, and we still think that you'll get down into that 79, probably even 78 handle down here before we can feel more comfortable with the Aussie. Here's the big picture. We'll show you a monthly chart, and there you see our support a little bit better on that chart. We think overall that you're going to see value. You're going to find long-term value down there at those levels. And once you get a little bit lower, we're definitely interested in starting to dollar cost average this market on a cash basis also. Next market, we're going to take a look at the 800-pound gorilla in the room, so to speak, the Swiss franc. Here's a weekly chart of the Swiss franc. You can see that massive move down in the dollar Swiss. Here's a look at the monthly chart of the Swiss franc. What did we say last week? I pointed out, boy, there's a whole lot of room on the upside in this market, isn't there? Well, that's the way I view it now. If I thought there was if I liked all that room on the upside last week, I love it now. You see some lines on the chart I have here drawn. That's essentially a buy zone for us, and the bottom of that zone is 625 or so. That's a Gann level. In Dow theory says that the market can retrace up to 2/3 and maintain its overall direction. So in this case, you haven't retraced 2/3. That's why we still like the Swiss franc, dollar Swiss, on the upside here. Big move, and that's why we have to put a disclaimer on the report, because no doubt about it, trading is risky overall. Our overall strategy has been long the dollar index and short the euro, because that's where you have all the negative fundamentals in there. But we still like dollar Swiss on the upside. And if anything, this market to me is safer to trade or safer to put investments in for what happened Thursday now, because essentially they were just unwinding what had happened here. Here's when the Swiss National Bank tried to peg the currency to the euro. They didn't want their currency getting so strong they lose advantages there. So they set that peg to the euro here. I remember one of our students, Gordon, saying at the time, "I'll never trade the Swiss again," he was saying, because you never know when that central bank can come in and do something crazy like that, as they did here. Well, here's when they tried to intervene in the market. It didn't quite work out. Here's where they unwound it. So here's where they intervened. Here's where they took off the intervention. Essentially now the market's free to trade the way it wants to. And as I said, hey, last week looks like there's a lot of room on the upside. Now, from my perspective, now there's even more room on the upside. So it's going to be interesting to see how this market goes forward. But for our money, we'd be pretty comfortable now with actually setting up, starting to dollar cost average this market on the long side, dollar Swiss. So yeah, I like dollar Swiss more than ever. You had a higher high here, and now you're putting in what potentially is going to be a higher low. So we'll have to watch this market long term. Switzerland is still Switzerland. They're surrounded by Europe. It's a landlocked country there. We don't see it being able to compete like it used to against the different trading platforms around the globe. So we definitely like the US dollar over the Swiss, and that's our view of what happened there. So longer term, we still like dollar Swiss on the upside, and we think that big move that you saw Thursday of this week is going to prove to be a long-term opportunity to start to dollar cost average it. Next market, the dollar index. There's your dollar index. I'm still on the monthly chart. You can see you did take out the 05 high here. Boy, that's going back a long way. So that's a 10-year high you have in this market now in the dollar index. We wouldn't mind seeing a correction in this market. Let me pop down to a daily chart. but that we would see that as essentially an opportunity to just continue to buy dips in this market. It's been very good to a short-term buying dips in here as the euro has been selling rallies. And here's our spreadsheet where we keep track of what we teach and what we do on a very short-term basis, our day trading track record. Pretty quiet later in the week because you had all that volatility, that sideways market before the big Swiss news kind of took away some opportunities from us. But we had a couple trades early in the week, and we just keep adding to that track record. You had a nice trade long the dollar index Sunday into Monday, and then you had a nice short in the euro Monday into Tuesday, it looked like. So cumulative pip total for these day trades this year so far is 350 pips or so. Dollar value on that be $3,510. Next market we'll take a look at will be the euro. Yeah, the euro's really had the rug pulled out from underneath it recently. The Swiss news, didn't help it either. If anything, you saw an acceleration of those lower prices. You got all the way into the 114 handle at one point. So nothing's changed for us here. We love selling rallies and just maintaining shorts in the euro. Here we'll give you a longer term look at it, and we think 110 is fair, well, certainly a lot closer than it was a week ago, right? Look at that. You lost 500 full pips in the euro this week, so no surprise for us. We think continued lower prices here in 110, and eventually par too, we believe pretty strongly is going to be in the cards for the euro. Next market, gold. Gold in the midst of an upside correction here. Tricky thing in trading is measuring when those corrections are going to come and how long they're going to last. Here's the monthly chart. You can see predictably the market did find support on that trend line. We had that 625 level there that we pointed out that to. Technicals are an interesting thing. We believe that the technicals, of course, are a reflection of what's going on fundamentally in that market, but it's just so interesting that time and time again the markets happen to bottom on support there, and that's what you saw there, and that started that correct. Let me drop down to a weekly chart, and there you can see you've got a pretty good correction going. The turmoil in the Forex market put a bid in the gold market. Still plenty of people out there feel that gold is a currency. We view gold, however, as a commodity, and we see commodities being in a secular bear market, and you can see it on this weekly chart too. And here, let me drop down to a daily chart, and I'll point out how we view this guy. We see the primary trend here as being down in gold, marked by the pattern of lower highs. We see from midsummer on as a secondary move, and you can see you're having a pretty good correction of that secondary move, but we see it so typical of a shorter term move. You essentially have a short covering move. You get the gold bugs excited, which is generally not that hard to do, and you get a move up toward resistance, and we would see that as an opportunity to get short. Interestingly, you closed above this resistance level here. This is a bigger level here, just above 13 even. So we see a move above 13 even as an opportunity to get short gold. We see the primary trend overall here. You can see it as being down. Even the secondary trend is still being down also, and this just being more of a shorter term move, correction higher. So we see gold coming up. We think price wise and time wise you're very close to a top there, being a potential opportunity to get short. Dollar yen. Boy, dollar yen's come a long way. Looking at a monthly chart here, put it in perspective, there you can see you're at some, you reach some big levels. Now you see it at 625, then the 2/3, big levels. If the market's going to pause, generally that's where it's going to do it at. So huge move up in dollar yen, and we see here you drop down to a shorter term daily chart, and you could see where the market knocking its head on that resistance. Pretty good update Friday as the dollar recovered pretty quickly there too. Great intraday market to trade because you have those big swings, but from an investor standpoint, longer term perspective, it's just come a long ways, and I think it'd really be pushing it to try to anticipate still higher prices there. Definitely wouldn't mind seeing secondary correction here, but again, we would still see that as an opportunity to get long that market. My name is Jay Norris. I teach trading at Trading University. Thank you so much, and we look forward to seeing you next week.